In this video we're gonna cover 6 major indexes for the stock market. We'll try to understand why people follow them, why it is important to investors like you. S&P 500. The S&P 500 is a widely followed market index that represents the performance of 500 large capitalization US companies listed on major stock exchanges. These companies span various sectors, including technology, healthcare, finance, consumer goods. The S&P 500 is market capitalization weighted, meaning that the weight of each stock is determined by its market value. Investors place the great importance of the S&P 500 as a crucial benchmark for the US stock market. It provides a comprehensive view of a broader market and serves as a performance benchmark for investment portfolios. Paying close attention to S&P 500 might help you get insights on market trends. Due to its broad representation of large capitalization companies across various sectors, the S&P 500 is considered a reliable indicator of the overall health and direction of the US economy. Not only individual but also institutional investors are closely following this index. Dow Jones Industrial Average. This index is also known as Dow Jones or simply Dow. Is one of the oldest and most prestigious market indexes. It comprises only 30 large, well-established companies representing various sectors, including industrials, technology, finance, and consumer goods. Unlike other indexes, Dow Jones is price-weighted, meaning that the stocks with a higher price have a greater influence on the index movement. Dow Jones holds significant status as an iconic index that reflects the performance of leading and established companies. Its long-standing history and prominence make it reliable to gauge market sentiment and economic health. Despite its limited size of only 30 stocks, Dow Jones garners widespread attention and has potential to impact investor sentiment. The main reason to pay attention to Dow Jones is actually for evaluating the performance of the blue chip stocks and rely on it as an indicator for broader market trends. Nasdaq Composite. Unlike Dow Jones, that tracks only 30 stocks, Nasdaq Composite comprises over 3,000 stocks listed on the Nasdaq stock market. Nasdaq Composite focuses primarily on technology, biotechnology, and other growth-oriented sectors. It boasts a significant representation of prominent technology companies, including industry giants like Apple, Microsoft, Amazon, and Google. As a result, Nasdaq Composite is widely regarded as a measure of the tech-heavy market performance and serves as a vital indicator of the trends in the technology sector. It's mainly used to gauge a technology and growth sector's performances. It is closely associated with innovative companies attracting investors seeking exposure to the dynamic technology industry. Mainly, investors with a keen interest in the high growth potential and emerging trends closely monitor Nasdaq Composite. NiceFang and NiceFang Plus. With a closer look at tech giants, NiceFang Index focuses on original FANG stocks, Facebook, Amazon, Netflix, and Google. All these companies have equal weighting in the NiceFang Index. It provides investors with exposure to these internet-related companies. Expanding on the NiceFang Index, the NiceFang Plus Index includes additional major technology companies such as Apple, Alibaba, Nvidia, Tesla, Baidu, and Twitter. This broader index represents a wider group of influential tech companies. Both of these indexes provide valuable insights into performance and the trends of the key players in the tech sector, and it's followed by investors for this reason. It's fair to say that major tech companies are the drivers of the market trends and innovation nowadays. Enough with the giants. Russell 2000. Unlike S&P 500, Russell 2000 is focused on smaller capitalization companies. This index tracks performance of approximately 2,000 companies in the US. The Russell 2000 is widely utilized as a benchmark for evaluating the performance of small capitalization stocks, and it is considered an important indicator of the overall health of a broader US economy. That's due to consideration that smaller capitalization companies are seen more closely tied to the domestic economic conditions. Given that it is a small capitalization index, it's mostly followed by investors who specialize in small capitalization stocks. Many of investors believe that small capitalization stocks have greater growth potential and can offer opportunities for higher returns. In my opinion, the best value that Russell 2000 provides to investors is actual when you compare this index to other indexes. Let's say your S&P 500 is growing as well as Russell 2000, then you can gauge that, well, US economy is doing well. And if you see that some other index is growing but Russell 2000 is not, well, this could indicate what sector is booming now. Remember to evaluate its performance within the broader market conditions. Last but not the least, Wilshire 5000. Wilshire 5000 Dollar Market Index is a comprehensive market index that includes nearly all publicly traded stocks in the US. It covers companies of various sizes and sectors, incorporating stocks from all major US stock exchanges. Wilshire 5000 is market capitalization weighted, as well as S&P 500. You now know what it means. Much like Russell 2000, this index is used to evaluate the overall health of the US economy. It provides a broad, inclusive view to overall market performance, encapsulating companies of different sizes and sectors. Investors pursuing a holistic understanding of the US market watch this index closely. This index might help you identify investment opportunities, but the main point is that it lets you diversify like no other. By encompassing a vast array of the stocks, the Wilshire 5000 offers investors valuable insights into the performance and trends of the US equity market as a whole. Thank you for watching. Check out my other video about upcoming crisis next. Remember to subscribe for more informative content on the stock market. If you have any questions or topics you would like me to cover in future videos, please let me know in the comments below. Capitalist speaking.